Hey traders, Parker here with an end of the day recap on a trade that I took on PXMD. What you're looking at is my system that I developed after reading Ann Coulin's book, A Complete Guide to Volume Price Analysis. Some of it, a lot of it is based off of her book, and then some of it is some other research that I had done, especially when it came to the buy-sell pressure averages or volume within these candles. And that's basically what you're looking at. Especially when it comes to these clouds, it shows you the different pressure areas of buying and selling. You have the pre-market and the open market and then after hours as well. But for the most part, I just really wanted to go to VPA, but I'll be going over this as well. And if you look at these different, I have this set on a 30-minute. So it's looking for the biggest buying pressure for that time period for the day. So it's bound to each day. Each day it starts back over. So right now in the pre-market, this was the biggest 30-minute candle for this time period. So we can actually go to the 30-day, 30-minute and see that candle. So this was the pre-market candle that created that cloud, and this was the preceding candle that created the day cloud. And this candle back here actually created the selling pressure right here. So I'm going to take it back to the 5-minute because that's the one that I wanted to show you what was going on. So you can see that as the clouds overlap, they actually create areas of support and resistance. And that's one of the things I found by after doing the research, actually just watching how this thing played out or stocks played out. And that's how you get in these areas of support and resistance. And you can see right here, this cloud from the pre-market pretty much was resistance the whole entire day. You have a wick above there, but you don't have any closing candles above that. And when you came down to the bottom, that selling candle back here on the 30-minute selling candle back here actually became support for the whole day or this part of the day. So I'm going to get rid of the pre-market and we're going to look at the actual day. And I'm going to get rid of the after hours as well, because we're going to look at what happened during the day. And you can look right here, at the open, you have this 30-minute, you can might as well say RB, open range right here on this candle right here. And price pretty much stayed within this open range or this volume candle right here. This it's actually selling volume. And this was the buying that was on it, on this candle, until this 30-minute candle opened up and it created a higher buying pressure. And then this candle right here created high buying pressure as well. But what I wanted you to note within these candles, you have these triangles. The triangles represents the irregular bodies or anomalies from Ann Coulin's book. So this cyan triangles represents the big volume, small candles, and the blue triangles represents big candles with small volume. And what they're showing you is, she called them tests, market makers testing the market, looking for supply and seeing if the supply was completely bought up, and then start a campaign to push the price up. If this happens, if you get these candles like this, the irregular anomalies with the low volume, big candles, and they do these tests to figure out if there's any more supply in there, the sellers are gone for the day. And once the sellers are gone, they push the price up. But they're buying during this whole time period as well. One of the analogies that Ann Coulin gave was from Wyckoff's book and from Sir Isaac Newton. Look at volume being the energy and the actual candle movement between high, low, or close and open being the work being done. So it's actually the energy equation. And like I said before, the volume is the energy and the output or the work that's been done is the movement in price. So this is unsubstantiated by volume, saying this it's not substantiated by this. These big candles are not substantiated by volume, which make them anomalies. So I saw this and I kept buying. I kept buying throughout this because once I seen this candle being created, or this buy sell pressure area being created, I started buying here, and I bought more here because this drop was very unsubstantiated, and I saw it couldn't hold the 5, but it could probably hold the 430, and that's exactly what happened. So I just kept buying down here as I seen more and more anomalies created, and then from there you actually see this big 30-minute. It's not a big 30-minute candle, but you see this greater buying pressure come into the stock at this point during the day. And it actually, I guess you can call this a wedge. It broke above this wedge as well for the day as well. So from there, if you're looking at the colors of the candles, you can see this bright green candle represents higher volume. So let me shrink down my oscillator, and so you can really see the volume. Even though it's not necessarily very significant from these, but as the day went on, the volume average is going down lower as well. So this candle is above average volume for a 12-period move average of volume. And this became ultra high volume for this for that 12 period. And this is ultra high to the buying side, and this is ultra high to the selling side. But what you get in these irregular bodies, and what you can see right here is all these doji candles are appearing up right here, and it's basically a fight to get back above 5. And you can say that everything stayed within the range of this candle right here, this high and this low, or the body of this candle, and basically need to break above this high or have a close above this high for the continuation after this move up. And that battle right there really need to hold the 5 right there. And that's why you seen this new buying pressure on for this 30 minutes to develop a new buying pressure area. And you can see right here, stock moved up, and this resistance from the day still held right there from this point right here, because it stayed within this box, but it had to fight to get back in this box over here. And it finally got back in this box. And you can see right here with the volume candles, yeah, you're getting extreme volume to the high side, but it wasn't enough to get above that area. And you can look at half dollars and whole numbers as resistance or support, and that's exactly what $6 right here represented, was the resistance. And it came down, but you had this ultra high volume right here, and that's one of the other things Ann Coulter talks about. You get an ultra high candle or ultra high volume candle like this, and it's kind of like a blast off where it's releasing all that pressure, and it pushed the stock right back down. And you can see right here, you have this I'm going to say average volume candle. And then you have another anomaly right here where this body is bigger than, it's greater than the average range on for a 12-period move average of the range. And the volume is less. And you can see it's on decreasing volume. Then you had this small buying volume right here, and then this huge candle right here to bring everything down. But from there, you have all this light volume, average volume from there. And you had a big push down, then you had a light volume where the stock didn't really go anywhere. And then you had to push back above, but it pushed back into this buying pressure area that was created. And then you got this big move back up. And that's why I said this area right here could actually represent resistance and support. And then as you went throughout the day, you had another anomaly or irregular body right here showing all that pressure because the stock is trying to break above 6. It was able to break above 6, hold it for a little bit, and you had immediate sellers came in. And this is just people taking profit once the stock actually went up to this close to the 650 area. And then another doji candle on light volume, this decrease in volume, and then this light volume as well. And then you had another push for the stock to try and break above 650, and 650 was the resistance on this stock. And then from there, you can see as it follows the trend line, it basically broke down from there, and it basically just ranged out from there. And if I'm remembering correctly, and Coolin would call this a buying climax, where the stock just falls apart and just goes down. And over here will be a selling climax, where all the sellers, all the selling stopped, and the stock was able to finally push above. We can look down here also at the updated buy sell pressure average momentum oscillator. And you can see within the oscillator as well where it pushed up. And you can see how these bars are small compared to any of the bars back here because of the amount of pressure. And it's over an average as well. Even though this might be more volume than the preceding candles, for the most part, when you look at it on an average, it's less. And that's why I'm showing this move right here wasn't as significant as these move back here. And then it grew into something significant, but it was brought down. And you can see how the degree as it goes below 0 is less as well, because it's not a lot of volume on this. So this is just your momentum within these candles of buying and selling pressure. And all you're looking for is the momentum to push above. I turned this into a histogram, but you can turn it back into the actual line as well, if you want to look at it like that. And that's what you're going to get. You're going to get those waves because it's tracking the buying minus selling volume throughout the day, throughout this stock. But like I said, what made me keep buying was the fact that I believed that there was going to be a selling climax, especially seeing these average volumes and all these anomalies appear within the stock. And that's is one other thing I want to show you within this stock. Also, I drew out a field because this stock doesn't really have a lot of information. So we can push it back to the daily. And one other thing I wanted to show you was these labels. As you can see, they turned pink. And it's basically, it was decreasing selling pressure within this stock. So that's why the label went from red, from all this selling right here, to pink, showing you that buyers were coming in. And I'm not sure what it was the day before, but it's 33% of selling still within the stock day over day. So one of the things you want to look for is a positive in this area within these labels, and the average as well down here. And basically I drew my fibs from this high to the low of the stock, and I drew out my significant price levels. And we'll go back to the stock. And this is what it looks like on a 30-minute. And we can take this back down to the 5-minute, and we can look at it, examine it as well with the buy and sell pressure average indicator. The pressure map. And that's where you're getting these pressures, but it's not accounting for the pre-market, and that's what we want to put back on. And the after hours as well, I'll go and put that back on too. And what you're looking at, this is really the after hours. And you can see back into these overlapping clouds where it showed areas of support and resistance. And the stock just had to fight between those areas of support and resistance when it fell into those, I guess you say channels, or those overlapping areas. And you can see right here how the stock, when it pushed above, it had to get above this overlapping area as well. And then once it did, it had to push above this area and became support. And it broke above, but it still had to fight in between these overlapping areas as well. And that's pretty much it. But this was a telltale sign right here that this was your buying climax. Now you have a small body on high volume, and it's be considered an anomaly. And you want to look for, you don't want to see these, the anomalies or the cyan, light blue triangles at the top of a run. And you do want to see these dark blue ones at the bottom of a run down. And you really don't want to see these dark blue triangles either at the top of the run either, because it represents exhaustion. Because if you have a big push up with a dark blue triangle, it just represents exhaustion. The same situation down here with these pushes down. If a market maker wanted to take it short, he would look for exhaustion in the buying. Yeah, in the buying as well. But that's pretty much the end of that. I wanted to show you one of the other indicators I've been working on as well. And this is just another strategy. It's the same stock, but this is just another strategy. It's the same indicator I did in my last video. It's called the inside day indicator. And it basically shows you different areas of support and resistance when candles trade within one another. And right now I have it set for 3, and I have it set for a 30-minute. But I'm going to push it down to a 5-minute so we can have another view. And you can see from here, back here, it created these areas of basically the candles are trading within these previous candles like this. And you can see right here, he had this push above on ultra high volume. This is basically the pre-market. And it created another area of consolidation within this candle right here. He had a push above with ultra high volume. Basically, the candle was trending from there. And you had the same situation happen here. And it finally broke down below. And it held this Fibonacci level right here throughout the day, and then it trended back down when it broke down below on light volume. But this is just another strategy if you want to play this strategy instead of looking at volume, or you still have the volume down here, but this is basically trading the breakouts of these inside day candles. And it's basically what this is right here. You can see how this area right here represents support at this point and resistance at this point, and then you had this big volume to push it down and create another one, and it became resistance, and it broke back into it, but it couldn't hold that area, and it finally broke down below, and you had this next one as well. And this represents areas of consolidation within candles, and it's called the inside day indicator because actually is used on the inside. It's used on the daily range versus the intraday range. But it works the same principle because you have these candles trading within this one candle range. And that's pretty much what happened on the at the end of the day. But that's one of the ones I'm working on. Actually an improvement. So we'll get rid of the regular one and put this one on. This is the one I'm working on, or improved version. As you can see, it pretty much takes over the whole screen. And basically it's showing you past areas of consolidation within other candles. And you get up to 30 of them. 30 negative and 30 positive candles. But we're going to push it down to 1 so we can get the original view. This is the original view we had. This is not available in multi-time frame. Whatever time frame you're on, that's basically what this one's going to work on. Just because of the code of pushing out those previous levels won't allow that. But I'm going to push it up to 5, and you'll get 5 additional areas of consolidation or previous consolidation within those candle ranges. And it really works very well, especially on the daily time frame. And we're going to push it over to the other indicator I wanted to show. And this indicator right here is basically my volume indicator, the volume map indicator unbounded. This is not bound by the day. This is, you can use this on any time frame. So it's looking for the highest buy sell average pressure, and it's tracking it. And I'm going to push it back to the 5-minute, but I wanted to show you originally it was on a 30-minute, and it found those same areas of support and resistance. But like I said, it's unbounded. It's going to show you once you create another one from the pre-market, it's gonna from the day it's gonna create a new one, and it's not gonna leave anything low. But let's push it to the 5 minute. And right now I have on 12 period average. And you get a lot of noise because it's just looking for the highest. If the buying pressures average over 12 candles, making new highs. And so it can be noisy. And when I say noisy, it's just showing up a lot and it's not giving you a clear direction. So what I've learned was just to increase the average. And if you're unfamiliar why I use 12, 24, and 48, it's because 60 times 4 gives you 4 hours, right? Divided by 5 gives you 48. So you're getting 4 hours worth of data on this chart now. And you can see it's less noisy now. You can actually see where these 4 hours worth of data of buying pressure or selling pressure making new highs. And you can see how it just gradually went up from there. And this was the last one. This was the last buying pressure for that time period. And this right here was the last selling pressure for that time period. And you can see how it worked as an area of support resistance. It basically once it fell out of these two areas right here, it basically represented resistance. Then you had this one where it made a new high over the 48 4-hour period. It made a new high, and basically stock fell out of it with unsubstantiated volume to the downside. But it fought back above and it was able to get back into it, and it used it as support. It pushed above back into the sell pressure area, high area of selling pressure, and it fell back down into this area of buying, and it shot back up and it created a new area of buying pressure. But what you can see right here, it created another area of selling pressure within this buying pressure, and it worked out as an area of support right here. And then it fell through on this high volume, but it was still in this area of buying pressure where the stock traded into this candle right here, broke it back down. But it was unsubstantiated by volume. It scooped it back up and then pushed it back down from there. And what you can see over here is really a double top, if you want to say, or a W pattern. So you have your move up, down, the whole W pattern right there. And it was inverse, it'd be bullish, but it's actually inverse, but it's bearish, but it was the other way down. Around, it would be bullish. And that's pretty much it. I'm going to push it to the S&P 500 to show you how these other two indicators actually work. And I guess I have something still showing on here that should be showing. Oh, those two. Because I'm showing you that it's something I'm working on. So it's not perfect yet. I haven't got out a lot of kinks and bugs of this indicator. But it works just fine so far. But we're going to push it to the, I think it was three-year day. So I'm going to get rid of the VWAP. I'm going to put this on a day. And I'm going to push this to 20. Come over during the pandemic. You can see right here. This was the highest buying pressure during this period. This was the highest selling pressure during this period. And the stock, even though it created this buying right here, it pushed above. It couldn't clear that selling pressure. And this couldn't hold it as well. Once it fell through, it tried to get back into it, and it couldn't hold it, which this became resistance. Same situation down here. It created this big area of selling pressure. The stock held it for a little bit, but it fell through. Tried to get back in it, and it couldn't, but finally did. And then it pushed down, and this area became a support, but this area up here became resistance. Same situation over here. It pushed through. It was finally able to push through, but it still represented resistance. It fell through, created this new area of buying. And even though this one's gone now, it's still, you want to wait for a break above here. So I'm just going to put a line right here. Because it still needs to break above this area. You can see before it moved higher, it still had to work with that area right there. And finally broke above, and old resistance become new support. And you can see it became support when it retested its support. Finally broke above this one as well. And this is where we are today. With like I said, I have it on a 20 period average right now, but you can shift it down, whatever your needs are, or whatever your preferences are, I should say. And even now, you can see right here, it created this area of buying pressure right here on the stock. And you can see this today, it was in there. It was able to overcome it for a moment, but it still represents a high area of selling as well, or ultra high area of selling. And the SPY is going to have to overcome this 405 to become bullish again. And that's pretty much that indicator. And we're going to shift it back to the inside day indicator that I had created. And I'm going to go that same 3-year day period. And you can see that these these candles right here, how I traded within these other candle ranges, and why this inside day indicator really represents areas of support and resistance, because you can see this the S&P 500 is following those levels. You can see right here, it fell in that area and it was an area of support and became an area of resistance up here. Same situation. This is different strategies. That's all I'm showing you. The one that was before was one on volume, and it's find the highest buying and selling volume pressure within the stocks. This one just looks with candles trading within themselves, like trading within themselves. I have it set for 3 candles, so it takes 2 candles to trade within this candle to create a box. And it works out pretty good as an area of support and resistance. And I'm going to push it all the way up to 15 and let's see what it looks like. So you're going to get those 30 areas. And this is what it looks like. You can see right here that these candles were trading within that range, and then it pushed up and it was trading within this range, and it actually created something that was overlapping, and this candle had to overcome both those areas, and it traded within those two. It traded within this empty area or range. These range with nothing to stop it, and it finally make it above, but it same situation. It had to overcome this area of resistance from this candle trading this range right here. Same situation with this range. The stock, the S&P 500 just didn't go down during that time period. And what I should have done was put on a full 10 years. So you can see the entire thing. And it actually, that might be too much. But you can see where the S&P 500 stopped. You see this range right here, or this inside day right here. You can see how the S&P 500 bounced those times. Bounced, and then it finally broke through. But where did it come back to? This area right here. Same situation right here. It didn't just fall through. And that's why I believe you have all these gaps in between this area, because it didn't just fall through everything. It stopped at each one of those areas, and especially because when they were overlapping. And it had to fight its way back up into those areas and finally overcome all of that. And that's my belief, and that's what the candles are obviously showing as well. Once it was able to overcome all that stuff, it created another area of inside trading within the candle range. It broke above it, came back down through it, broke through it, and then had to fight its way back through it again. I apologize for this video being so long, but I really wanted to show you in depth what was going on and why these indicators that I've created are really helpful in whatever strategy that you are using or whatever your preference is. This one isn't complete, so you won't be able to find those two on my shop. But I'm just debuting them here to help you find different strategies that work for you or what are best for you. And even this morning when I was doing the ES, you can see these same areas on the ES. Even though I drew out those areas of support, supply and demand, you can see the same situation here. Some of those areas that I drew out for supply and demand, they equal right on up to some of those periods where, or inside day periods where candles were trading within each other. And you can almost look at some of this stuff as being supply and demand areas. And even now, where did it stop at? It stopped at this area right here that's already planned out from, let me go, just open it up. So it stopped here from this trading range within these candles. So this was the one that it stopped at. And this is where we are today. And it couldn't get back above this area overlapping inside day trading candles right here. And let's peel it back and let's go to 5. Same situation. These candles right here, you was able to overcome it, but it came back down and traded within these and within those areas. And that's pretty much the end of this video. I didn't mean it to be this long, but I wanted to give you as much information as I could. I wish you all the best, and look out for these indicators on my shop, or look out for my other videos on these indicators when they're ready. I wish you all the best, and God bless.